China, I believe, is facing what I call balance sheet recession. And that is that once the bubble bursts, financed with debt, the debt remains, but asset prices collapse, and people have these balance sheet problems that they want to repair. How do you repair your balance sheets? You pay down debt. And so many parts of the Chinese economy might be paying down debt. And when that happens, someone has to borrow and spend this money. Because in the national economy, if someone is saving money, someone else has to borrow money to keep this economy going. And usually the central bank and those of us in the financial sector will take the money from the savers, give it to someone who can use it. And the too many borrowers, central bank will raise interest rates. Too few borrowers, central bank will bring down interest rates to make sure that the cycle is maintained. But once you're in a balance sheet recession, you bring rates down to very low levels. There's still not enough borrowers. And in that case, there are only two choices. Either you export your way out, meaning that foreigners will do the borrowing, or the government will do the borrowing. And at the moment, China seems to be emphasizing this export drive. So manufacturing numbers, as you indicated earlier, are doing quite well. But China is the largest trade surplus country in the world. And that was the case with Japan 30 years ago. When you are the largest trade surplus country in the world and this country tries to export its way out, there will be a lot of pushbacks from the trading partners. And that could derail that strategy. Right now, it seems to be working. But, you hear concerns from all these other countries that China may be on its export drive. And if that part stalls, then you're only left with the last measure, and that is fiscal stimulus. And basically, that's what Japan had to do in the 1990s.
We've been getting a lot of Caixin PMI numbers. Just staying on the manufacturing side of things. So when it comes to Caixin manufacturing PMI, we're talking about exports-oriented, smaller companies in the country, right? But Caixin has been outperforming the official data, the official public figure for the last 7 straight months or so. Does that mean demand externally is picking up, but not necessarily domestically?
I think that's the right way of looking at it, because I understand that domestic demand is still very weak. So many companies want to repair their balance sheet. So many households want to strengthen their balance sheets if they're not just repairing it. And so there must be a push to export its way out for individual companies as well as the whole economy. But, once that happens, and then when reactions or the pushback from abroad hits, then the whole thing could slow down. It's not happening right now, but it can happen in a couple of quarters. When Japan was trying to do that 30 years ago, Japan was in balance sheet recession after bursting of the bubble. It tried to export its way out. The bashing Japan got was huge. I was in the middle of it, actually representing the U.S. position on trade in Japan. Even though I was still a Nomura employee at that time, there was a word Japan bashing at that time because Japan tried to export its way out. There was a huge pushback. Right. The same thing can happen to the Chinese exporters at some point.